download Gigi's screenshot, and we will start. Okay, let me download that. Perfect. I'm doing well, actually really good. This trade here on Edge made my day. I'll share it with you guys in a bit. But first, we'll definitely go through your trades, right? Hey, Samin and David. By the way, guys, the webinar and the trade book is uploaded, are uploaded already in the Education Center for those who asked me or emailed me. Okay, this is Kyle. Thank you, Unknown. Really appreciate it. Hey, Nick. So, okay, let's start here. This is DKNG, and let's see what you did on DKNG. Was this sort of a parabolic reversal? I'm drawing this here a line. It's not literally parabolic, but it's definitely not bad. We didn't have any pullbacks in the 1 minute chart, right? It's just dropping down, consolidating, dropping down, consolidating, dropping down. If we just draw a straight line, it's definitely not so parabolic, but it's decent. It's way better than having a line which is like this, right? If you have a line which is drawn like this, this is the best one I would love for parabolic reversals. Now, the next thing we're having is 3 consecutive 5 minute candles, which we love in parabolic reversals, right? We want to see 3 consecutive candles with no pullback, because usually we expect that maybe after 3 candles, stock might do a pullback, right? At the low of the 3rd candle, or the 2nd big candle, we want to see a reversal candle, which we have right here. A reversal candle, sort of a hammer, right? Or a doji with a bigger lower wick. As a confirmation, we're having an exhaustion volume. What's an exhaustion volume or a climactic volume? It's a volume which is at least twice bigger than the average 10 bars or 10 volume bars. We have it right here. Entry, new, 1 minute high. Stop loss for me would be below this candle, down there. And I like that you didn't exit right there. You respected your stop loss, you respected this original stop loss. You notice that it's making its second bottom higher than the first one. So you added to your position, moved your stop loss a bit. Did you move it? It would be definitely good if you moved it. You don't want to increase your risk. You don't want to risk 2 Rs instead of 1 R. And then partialing closer to the 9 moving average in the 5 minute chart. Remember what we said, guys? The 9 moving average is not an exact level. It could sometimes bounce out of it, closer to it, or above it. In this case, it was closer to it, which is good. You see that it's getting a little bit heavy right there, so partialing 70% and leaving the rest to break even. Now, what happened after that? Bouncing of the 9 moving average in the 5 minute chart, it started forming a reverse ABCD pattern. Reverse ABCD pattern is a breakout pattern. When we are holding to this pattern, we want to stock to break out or break the low of the day, and it did that. It did break the low of the day. But what's the ugly thing here? The ugly thing is after it broke the low of the day, it didn't flush down. It did small fake breakdown and then it started going in a range. I definitely don't like this on breakout patterns. Break of the low of the day, break of the high of the day, break of the range. When a stock breaks out, I want to see it flying. I don't want to see it just holding in a range. What happened right here after that, it did small double bottom at the fake break of the low of the day. You are taking it to the long side. This is definitely not a parabolic reversal right here. It could be either a scalp or maybe it will be a reversal, an extreme reversal pattern. On DKNG, I wouldn't have taken this one. Why is that? It gapped down on a week daily chart, and I don't want to take a reversal all the way to view up on stock which gapped down. If it gapped up and it formed this, I would be so keen taking it to the long side and holding it all the way up. This is an example actually of a trade I'm in right now. FSLY. FSLY on the daily chart yesterday it had a huge wide bar candle, a huge bar candle. And as I told you, stocks, they don't just simply open. This is where it opened today. They don't just simply open and go up, right? They could drop a little bit, then come back up. So I waited for FSLY to drop, find a bottom, come back up. It dropped around 50 or 40% on the daily chart. And right here, I'm taking it to the long side. And look at this, no partials. No partial at the 9 and the 5 because it didn't take it for a parabolic reversal. This is a larger setup on a larger time frame. I added on the pullback, we're breaking view up, adding, and I'm waiting for the previous day close. If it makes an M shape, I would just simply exit below 118, and below 118, I'll have 3 Rs unrealized. At this moment, I have around 6 Rs unrealized, which is good, right? But I want to be patient with my profits, and I'm going to hold it all the way up there. Let me show you what I saw on the 1 minute chart, or what actually caused me to enter this thing on the 1 minute chart. This is what caused me to enter it at the 1 minute chart. Dropping down, increasing volume at the low of the day. Higher low, this is the entry which you had on DKNG here, or the ad which you had on DKNG here. The higher low, this was my entry. The higher low, but unfortunately it got me stopped out. That was my stop loss, and that's totally fine. Look at the volume at the low of the day, sort of a double bottom. This is the first time it's doing it. It was just making lower lows and lower highs, and that's it. My entry, clear. Add, and just holding on it right now. So on a strong stock, I will be so patient and I will hold for a bigger profit. On a stock which gapped down and downtrending intraday, I'm not going to hold on all the way to view up. I'm just going to take it for a scalp, and this is what you did right there. You took it for a scalp to the 9 moving average on the 5 minute chart. So Nick, R is the amount, fixed amount of your risk, right? If you risk, for example, $100, your R is $100. 3 Rs means right now you made $300, right? If you risk, for example, $50, your R is $50. 6 Rs is $300. So you're risking $50, making, for example, $300. Or Rs could be also percentage. Some people don't trade in dollar amount, they trade in percentage. 1% of your account is 1 R. 3% is 3 Rs. Instead of just saying how much I made or how much I lost, because when you are trading, it's not about how much you made or how much you lost. It's about how you manage this risk. One could make $1,000. Second could make $150. Does this mean that this here who made $1,000 traded better than this here who made $150? Maybe this who made $1,000 made it averaging down, or maybe he made it after he's been down $2,000 or $3,000, he made it all the way back up to $1,000. This is not the right way of trading, right? This here who risked, for example, $50 and made $150 did better job managing his trade, right? So basically it's not about how much you make, it's about how you manage this trade. And that's why I'm not saying how much I made. If I make thousands and thousands, it doesn't mean I'm a good trader, right? In terms of Rs, you could just have it in general, and then everyone could just think about it by the way they are risking their trades. Exactly, Brian. So good job, Kyle, there. And let's see what Jenny did. Let me actually just do something there. Perfect. So Jenny traded BABA. Fundamentals, BABA back near all-time high, which is at 299. And close to the psychological level of $300. Yeah, definitely this could have been a really strong resistance right there, right? Tech analysis, long-term daily cup with handle poised for a breakout. So look at this. I love what you are thinking about right here. He didn't trade or take his setup based on the 1 minute chart or on the 5 minute chart. He based his setup on a bigger time frame. He sees that BABA is closer to all-time high, right? He sees a pattern on the daily chart, ready for a breakout. Intraday, he's seeing a huge ask at $300, right? So he's taking it on the way down. This is similar to what I did on FSLY, right? Didn't take it above view up, I took it below view up, which offered me a good entry. But look at this, at this moment it was making a high, a low, a high, a low, a high, a low. Basically, lower lows and lower highs. No need to try to catch it to the long side and hope that now it will go to $300. Maybe now it will go to $300, right? Maybe now it will go to $300. You can't just guess. You need to see at least the first signs of bottoming and then combine it with everything you had before and then execute the trade. I see a lower low right here, it's still weak, but look at this, the first higher high it did, and that was the entry. Bid broke local high just above the previous day close, and yeah, basically that was the entry. Stop loss, that's what I'm interested in. Stop loss was 50 cents, so you had your stop loss at 296. Now this is good and bad at the same time. I think it's good. Why is that? Because at the break of the range, you're having sort of a range around here. At the break of the range, it's enough to have your stop loss at half of the range, right? If you get in anywhere inside the range, your stop loss would have been somewhere at the low of the range. So you're entering up there, having your stop loss in the middle of the range, 296, somewhere right there. And early partial, I think would have been better to just hold on a little bit. I see that you actually partial closer to that level right there, right? That swing low. And let's see what happened right there. Another partial, another add, little bit early partial, which is not bad. I mean, I was at fault with that on age as well. I like the add for the break, and then you partialed all the way up. Why did you exit here? You exited because you had an engulfing candle on the 5-minute chart and a low right there. Okay, that makes sense. But remember, now let me give you a tip. Hopefully it will be helpful for you, right? This is 10:45 or 10:30. Let's take a look at BABA. This is where you exited because of an engulfing, right? Now look at this. From here all the way up here, it's making a higher low, 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 higher low. You can't expect the stock to just continue giving you higher lows to the moon, right? Market is trading in waves, so it's normal to have pullback. Stocks need to consolidate, they need to readjust, they need to pull back before a continuation. So this engulfing here doesn't mean that this is a reversal. It is an engulfing candle, but an engulfing candle alone doesn't mean a lot. It might mean a lot at the open, right? If the stock, for example, makes first 5-minute candle green, second 5-minute candle red, then a new low, this, yes, it would matter a lot. But later on the day at 10 o'clock, you can't trade only based on a candle. Let's say you're having a hammer here, like right here. Would you take it to the long side because there is a hammer and a new high? I personally wouldn't, because this is already a huge move and I'm just chasing the stock. So this doesn't mean a lot. The next thing is it's close to the 9-moving average on the 5-minute chart. Stocks usually pull back. They get closer to the 9 of the 5, bounce out of it, and then continue the uptrend, right? Sometimes they make 30 to 50% pullbacks, which is also normal. If the stock is going straight up and it's extended from the 9 on the 5 and it pulls back to the 9 on the 5 and that pullback is 30%, that's good. I don't want to see it below the 9 on the 5. If the stock did a huge move and then it started just going sideways and bounce off the 9 on the 5, I would expect it to later break the 9 on the 5 to make a decent pullback, 20 or 30%. Because this here is not even 20% pullback of this move right there. Now this here, in comparison to this here, is at least, I don't know, 30%, which is decent on a strong stock. So yeah, no need to just get scared out of this pullback. Even this pullback here should not be scary because it's not even 30% of what the stock made right there. Hope that made sense. Now let me just set my limit order on FSLI and we'll continue the trade review. Perfect. Let's see what else we have there. But yeah, overall this is a really good trade, Jenny. Your execution was amazing, your analysis were really great, everything was fine. Just the partial, the last exit, you could have held on to it, and it's something to work on. Other than that, this was an amazing trade. So B Tang, let's see what you did there. Traded a parabolic reversal. Let's take a look at that. Just quickly so that I don't read this all. So you eventually did a -1. Okay, we'll get to your questions now. Now let's take a look at NIO. NIO on the daily chart. I actually loved NIO today for a break of this range to the long side. I was looking at it. I took an open range breakout on NIO at the open. You don't have the open there. Anyway, I took it for an open range breakout at the open, and I added, and then it just unfortunately dumped down. But I was really long bias on this thing. Now let's take a look at the main indicators we're looking at for a parabolic reversal. What do you see? 1, 2, 3 consecutive candles. Now there is a problem with these 3 consecutive candles. It is parabolic, but it's close to the 9 on the 5. And the reason it's close to the 9 on the 5 is because the move started below the moving averages and ended up above them. So the moving averages, they were sloping down at the beginning. Move started here, right? It broke the moving average, then the moving average started sloping up. And here you could see that there are multiple candles, but there is a cross of moving averages. So this right here, it ruins the setup. For me to have a parabolic reversal, I want a stock doing something like this. So it's below the moving averages, and while it is below the moving averages, it's making 2 or 3 consecutive 5-minute candles. Right here, yes, it is 3 consecutive candles, but it just went above those moving averages. Another confirmation candle would be good. Just to wait for it to slope up and then to get extended out of it. Does this make sense? You want a stock to be above the moving averages and then make those candles, right? You don't want it to be at first below them, make 1 candle, 2nd candle, and then 3rd candle, and then tell yourself that, okay, this is the 9 and the 5. It made 3 consecutive candles. I'm going to take it for a pullback to the 9. Now look at this. Right, this candle was good. This 2nd and 3rd on the 5-minute chart, they looked good. Now let's take a look at the 1 and the 2-minute chart. Now here it looks good on the 1-minute chart, but this I wouldn't have taken. Yes, it is a good candle and it is a new 1-minute low, but based on what I see on the 5-minute chart, this wasn't ideal right there. So yeah, this would have been avoided. This right here, I would have also avoided it according to my rules. When I'm taking a reversal to the downside, I want to see either a red doji, a flat doji, this should be red, or I want to see a shooting star. If the shooting star is with wide white body, I will not take it. If it's with a red body, I would take it. Okay, if this was red, I would take it. It's white, I will avoid it because they just break down and come back up. I might take it to the short side in one case, if at the beginning it goes up and then it drops down. I don't want to see it opening here and then drop down. This case, I will not take it. If it opens here, goes up, rejects, starts coming back down, that's when I'm going to take it. This here was ideal. We're having the doji, which is red, or reverse hammer, which is red, and then a new low. One thing though, this shouldn't have got you scared out, right? It could make a double top with the 2nd top lower than the 1st one. Yeah, I see this, Brian. Exactly to the levels right there. So this was another confirmation actually. You had it below a daily level, right? Now let's take a look at your questions. How could I prevent situation like entry number 1? Okay, number 1, we discussed it, right? This is how you avoid it. You will avoid it if the move starts below the moving averages and ends up above them, and the moving average is here in between. You will not, or you are not really supposed to take it. FSLY is giving me a hard time. It didn't get me filled by 5 cents. Now, 2nd entry, this was also discussed. You need to see a good reversal candle, either a red body if you take it to the short side, or a green body if you're taking it to the long side, or flat doji, or a shooting star with either small body. If the body is really small, I don't care about the color. If the body is wide, I want it to be red. This 3rd, it was ideal. I hope this makes sense. Now let's see. Trade one. Okay, see that? Okay, this we discussed all. Oh, one thing you can't expect a quick drop to the 9 moving average in the 5-minute chart, right? Market is not just doing going ideally to or doing ideally what we want it to do. It could either do it immediately or it could just give us hard time making waves to the bottom. And as long as it's making lower lows and lower highs, it's still looking good. Hey, Carlos. Lenny, let's see what you traded. So Lenny traded plug. You traded it to the long side. I actually traded plug today as well. But remember what we said, guys? This is exactly what we had on FSLY. Stocks don't simply just open and go up, right? Especially when the candle is kind of big. They need to make a pullback, at least a little bit of pullback, and then go up. So this is why I wasn't interested in plug to the long side immediately. You took it to the short side at the break with a stop loss half of the range, which is not bad in my opinion. Because was this the low of the pre-market? Yes, this was the low of the pre-market. It did break the low of the pre-market. It did make a 1 minute opening range breakdown. You took it to the short side and unfortunately it just got you stopped out. This is totally normal, totally fine, nothing to be mad about. But look at this now. You could have re-entered for the break. This would have been a good place to re-enter. Don't just give up. There have been taking a big move here. So look, this drop here, you took it to the short side for the break, it was ideal. Nothing bad, right? This move, yes, it was kind of big right here. I agree with you. But plug could move normally, especially at the open, and we see this. Looking at plug every day, and I'm trading it almost every day, it could make these type of moves, especially at the open. Later on the day it does, but it doesn't. But at the open it could move a lot. So there is nothing bad about this entry. I would have re-entered Lenny for the break right there. Reverse ABCD pattern for a 5 minute open range breakdown. Take it to the short side and then scalp it to the bottom. Let's see how I traded plug quickly. I honestly expected a bigger move outfit, but I just didn't do that. So look at this. What do we have there? This is a parabolic reversal. Not exactly a parabolic, and let me get back there. This here is actually exactly parabolic, but it didn't give me the reversal candle I wanted to see. At this stage, I didn't want to take it to the long side because the stop loss would have been just so wide, and I decided to avoid it. Now, what is it doing? It's making a higher low, which I liked about it. So I'm taking it to the long side and just exiting all out at 1860. I was long biased at this thing, and I actually expected it to just break up above this level, but the way it moved to the upside, struggling and then starting to get heavy, I didn't like it much, and I just decided to bail all out of this trade. And I actually was right about it. And even if I held on through this pullback, I would have exited here. Anyone knows why? Why would I exit there? Look at the full chart. Exactly, M shape, M shape. So what's this pattern right here with an M shape? From the webinar? Exactly. It's a reverse ABCD pattern with an M shape. This is my ideal setup for reverse ABCD pattern after a parabolic pullback. Exactly, Brian. It could be a mountain pass as well, right? I mean, for beaters. Basically, or a double top, we could call it however we want to call, but definitely this here just shows me that buyers aren't in control. It tried to make an ABCD pattern, but it failed. It just couldn't, and it ended up making a double top or an M shape with a reverse ABCD pattern. This here is a good confirmation to take it to the short side. I will never take it to the short side here after this type of pullback. But here I would do that. I'd actually take it to the long side if it breaks this area right here. At this stage, I'm doing nothing in this stock. Okay, now let's take a look at what else we have there. James, Chris, I had a general question. Was watching IBM this morning. Do you consider pre-market an ABCD pattern? Okay, we'll get back to that. James, let's see what you did. Got stopped out twice before the move, so big beats at 15.50 on the level 2. Okay, let's take a look at that. So CCL, first of all, okay, we don't have the daily chart. I don't remember how the daily chart looked like. Anyone remembers how the daily chart looked like on CCL? Did it gap up, gap down, maybe? Let's take a look at that here. I'm really interested in daily charts. Okay, it gapped up. I see it gapped up, which is definitely making it a good candidate for an extreme reversal. However, at the open, it just starts to sink down, right? It just starts to sink down without offering any pullback. How did you trade it here? Did you take it to the long here and get stopped out? No, this was so tight, and this was so risky in my opinion. Or you took it to the short side for the bid. No, this right here. First entry. Was it short or long, James? Okay, I guess it was short. So look at this. First of all, I wouldn't take this thing to the short side, like almost never. Why is that? 1, 2, 3. 3 consecutive candles, I usually expect a pullback. And remember, I actually shared this yesterday on the webinar. The playbook webinar, and I have this rule there: never take a setup based on the 1 minute chart if that setup is happening within the third consecutive 5 minute candle. So if I see a reverse ABCD pattern inside here, I will not take it. Why is that? Because after 3 consecutive candles, I expect the stock to make a pullback. And the pullback, I mean a new high on the 5 minute chart. In this case, I see even a 4th consecutive candle, but that doesn't mean anything. These, in my opinion, happening rarely. So yeah, I wouldn't take it. Then a 5th consecutive candle, where you took it to the short side, and then it did the pullback, right? And that's the new low. So what would be my entry? My entry would be based on the 1 minute chart the moment it makes a new 5 minute low. Because now we're having a new 5 minute high. This would be my only entry right there. This I would avoid. I'm not going to take that one there. This I'm not going to take as well, because I'm not sure if this is the end of the pullback or no. It could make a new 5 minute high, bounce off the 9, and then make a new low, right? But here, the moment it's making a new 5 minute low, I could take it to the short side. Let me zoom it in actually. This right here, I would take it to the short side. Now look at this. This would be my short, this would be my stop loss, because we are entering within the range. This is the low of the range in my opinion. This is the high of the range in my opinion. Okay, so I would take it to the short side here, have my stop loss at the high of the range, which is here. The moment it's breaking the low of the range, I would add to my position and I would move my stop loss to half of the range, which is my initial entry. This way, I'll have double of my position, and then I'll start partialing at the break. Let's take a look at the 1 minute chart. No, that's smart. I mean, taking partials based on the level 2, taking entries based on the level 2, it is good, right? But remember that the level 2, you can't trade only based on it. You need to combine it with the chart, with the pattern, with whatever setup you are trading right there. Isn't it better to take entries at VWAP as short? As long as short, I mean, it's not that it's better to take shorts exactly at VWAP. It's definitely good to get an entry close to VWAP, but you don't know where the stock is going to go at the open, right? And later on the day, it's so rare for a stock to get all the way to VWAP. stocks will be close to moving averages. VWAP could be somewhere anywhere there, but stock will be just far from VWAP, right? You can't just hope that it will pull back, to give you a pullback all the way to VWAP to get a short position. This way you will be missing this move here, right? You might be missing another move somewhere else. So yeah, getting entry close to VWAP is good if it's giving you the opportunity. If not, you would need to trade with whatever you have right there. Let's see. Most time which did first was taking for a break of the high of the day. As soon as it failed on big volume, reversed position on the second trade. Third trade took it long on a double bottom with a nice volume, and fourth trade took it short on a double top out on hammer with huge volume. Okay, let's see what you did there. Facebook, first trade you took it for a break of the high of the day. So the break of the high of the day, it didn't happen exactly with volume, right? And I don't take these type of break of the high of the days. Why is that? When the stock is just simply going up, 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 and then breaking the high of the day, I don't really love taking it, because this was already a huge move. People who are long here and people who are long here, they'll be taking partials closer to the high of the day. You'll be buying here, right? And they'll be selling here. So you'll be buying from those people who are there, which gives or which makes the stock be a little heavier at the top and the breakout less likely to happen. If the stock was going up in waves and then breaks the high of the day, in this case I would take it for a break of the high of the day. If the range was so tight, or here for example, look at this, here the range is getting tighter and tighter and tighter, and in this case, if it breaks here the high of the day, that will be a good position for me to take a break of the high of the day. But not here, because this is a huge move right there. Now let's take a look at your second trade. Short was good. Why is that? At least stock has distance a little bit from the 9 and the 5. You see a huge move right there. You see a double top setup, a reversal candle at the top, right? Another reversal candle right there. This is a clear double top pattern. You're taking it to the short side, and in this case you're having a good risk to reward. This is your risk. Your reward is at, even if your reward is here, it's still a good reward. So yeah, this definitely was good. Then you are taking it to the long side. This is amazing. This is how you want to trade, right? You want to be like those people who entered there. You want to enter as close as possible to the support. And look at this. You see what you did here? You did here what those people did here. You sold closer to the resistance, right? That is the good entry. You see it clearly making higher highs right there. Higher low wave, higher low wave, higher low wave. Why not entering as close as possible to the support and then partial at the day? If it breaks up, then that's good. If not, then you could play it to the short side. And here, this is what we call a channel. It's just holding in a range, and this is what you did. You played the range to the short, then you played the range to the long, then you played the range to the short, and this is how we play range. If you want to take it to the long side, you go in as close as possible to the support and buy as close as possible to the resistance. If you want to go short, go as close as possible to the resistance to the short, and partial as close as possible to the support. Okay. Sam traded Apple, took it for a 1 minute open range breakout, which is not bad, but one problem here, really early partial. We need to have good risk to reward when trading. If we just partial this way every time, risk $50 and make $20-30 on each trade, you will need around 70 to 80% win rate to be profitable, and it's really difficult to do that. I don't have even 60% or 70% win rate right there. What's making me money is the risk to reward. Making 6 hours of trade, making 5 hours of trade, making 2 hours of trade, this is what just makes me consistent. So you definitely might want to hold on to your trades, unless you're going for a momentum play, right? Taking it to the long here, stop loss, at least a new 1 minute low. Like the least you could do is a new 1 minute low, though that's definitely not enough, not every time at least, right? Once you are in, once you're having your stop loss, wait for at least let me zoom it in actually. Wait for at least a 1-to-1 move. Like the least thing you could wait for, if you are risking here, just make a 1-to-1 move. If you are patient waiting for a 2-to-1, then that's good. Because look at this. You see your loss here, and you see your profit here. Definitely this loss was bigger than the profit, right? So yeah, make sure to just be patient and wait. Yeah, exactly. See, just make sure to be patient with your partials. Epic pen freezed, so we're opening it one more time. So yes, I'm just be patient with your profits. If you lose, don't worry about it. You don't need to lock in early profits. Let's take a look at GG trade on Baba. So what did you do, GG? So this is amazing, GG. This is really good, and I like that. This is a huge drop, right? A drop. That's a pullback, which is around 50% or 60% to a resistance area, right? Making a new 1 minute low after consolidation. So we had a hammer here. It tried to break up. It did break up, a fake breakout, made a new low. You take it to the short side, had your stop loss up there, and this is the reward. You went in for a reverse ABCD pattern, so you went in for the breakout. I would have added there, yes. Where should I have added? I'm trying to add like you told me to do. I thought around 947. Yes, I would have added 947, and I would have told you why I would have added there. So now you are entering within the range. This is the low of the range. This is the high of the range, right? Once the stock is breaking out, you don't want it to come back inside the range. If it's really weak, or if it's really breaking out, then you want it to just run or retest and continue running. So basically, I definitely would have added here. I would have doubled my position, and my stop loss would have been somewhere around my entry point. Then take partials at the breakout. Exit at a double bottom. Exactly. Don't get scared by it. I mean, the worst thing which could do, or which could happen, is it getting back and getting you stopped out. Right? And if it bounces out of this level and comes back up, you will still be stopped out. The good thing is those ads here, they will be increasing your reward. And sometimes you'll be getting stopped out, but your rewards, they'll be way bigger. Like if you added here or doubled your position, you would have had double of what you made here. And if you're making 4 Rs instead of 2 Rs, and then get stopped out once, you will still be up because of this. No, I don't use the free roll hotkey. I add based on calculations. I do it manually, depending on where I want to have my stop loss at. The free roll hotkey is amazing hotkey, but it just doesn't work for my style of adding. So let's now take a look at another trade. This is Kaiser's trade, and I want to compare it to my trade on Age, because I also traded Age here. Kaiser definitely did a way better job on it. So this is my trade on Age. This is Kaiser's trade. So what Kaiser did is he used this. Look at these guys. If you just look at this here, me zooming it out, ignore, I know you don't see the candles, but that's not the key. I want you to see the moving average. You see how the moving average is being respected, right? And how it's bouncing outfit, making a double bottom. There it is, making a double bottom here, right? And then it's breaking out. You see this breakout? I like that. It's breaking out, then it's pulling back, it's retesting the breakout area. This is what we want to see on normal patterns. We want to see a stock breaking out, and after a breakout, we want to see it retesting. This is, I'm not sure if this is what he saw, but this definitely would have been a good sign to enter into a setup, and that's what he did. You could see here, he started getting into his position. at the retest, partialing a little bit just to be safe inside this position, right? It's pulling back. Look at this, same moving average, right? Same moving average, right? It's holding it. So what's he doing? He's adding to his position and then just trading it. ABCD pattern, adding to his position, partial, adds on the pullbacks, partials, adds on the pullback, all out at his daily level at 386. I didn't have that level right there. Now look at the trade which I did. It wasn't the same one, but I noticed the same thing. I noticed that the previous resistance right there is being retested, or it's getting bounced out of it, right? So I like that. Once I notice that it's breaking the range, I'm getting into the position, partialing all the way up. It's pulling back. I see that it's holding. After the breakout, we want to see that the stock is holding, right? That's what I saw. Adding. This is a hotkey mistake. Ignore it. Partialing at the break. Holding the 9 on the 1. You see, earlier on the day, trading based on the 1 minute chart. Later on the day, trading based on the 5 minute chart. So I see an ABCD pattern. Adding to the position. Partialing. Adding. Partial whatever I added. Still having some of my position there. This is where Kaiser added. This is where I considered adding, but I was afraid, which is my bad. Partialing at the breakout. Another bull flag. Add. Partial. Most out. And this is my mistake. My long buys on this thing. I decided to add to my position because I had a really low average on this thing. It was somewhere around $3 after this add. And once it just went to $3, I just bailed on this trade. So same setup, but the execution here was definitely way better because his entry and his average was at $2, right? At the beginning. So with his ads, he could maintain having a low average and get the full move. For me, my entry was late a little bit, right? And I didn't get the best ads. If we just compare the ads which I had and the ads which he had, look at this. Ads closer to the low. Let me get to the yellow. You see, ads at the lows. Exactly at the lows. Exactly at the lows, right? This is good because you could keep your average down. On small pop-ups, you could make money, right? I have a little bit of bad habit which I'm working on. I'm trying to add at the lows here. I succeeded in it, but look here. I'm adding closer to the breakout area, right? Instead of adding at the low, adding at the breakout. Instead of adding at the low, adding at the breakout. And the moment I finally added at the low, I got subbed out, which didn't work out for me, unfortunately. But yeah, that's it. How many hours on age? I got 8 hours on this trade here. I'm not sure what was the news, but this is the low float actually. So yeah. Do you guys have any questions? I almost took AMD for a parabolic pullback at 12.08, 12.09, but I didn't do because the 1 minute engulfed. I had a daily level at 88.74. Was that probable analysis for parabolic? Let's take a look at AMD. AMD. Let me have the 5 minute chart there and we'll take a look at AMD. Okay, at 12.05. Okay, I see 3 consecutive candles on the 5 minute chart. Now let's take a look at the 1 minute chart. Okay, now this right here, this is how I'm going to do. I'm going to draw a line. Decent, not bad, but I wouldn't have taken it because of these candles. I told you I want to see a red candle at the top or small bodied candle. You could take those as well. They do work enough time. So having 3 consecutive candles, parabolic move and a new low is enough. But just to increase the accuracy, I need specific candles at the tops. I'm missing a lot of moves because of that, but I'm fine with it. It was in the scanners, gappers, and also Brian posted it on his watch list, by the way. I had a question on IBM today. I thought it was potential ABCD based on action starting with open, but seemed to be ABCD down. I did not factor the pre-market price action. Okay, let me take a look at IBM. And yes, I usually also consider the pre-market price action. Yeah, definitely I see that drop on IBM. Yeah, so yeah, the pre-market price action is always included in the pattern. If there is a setup which is forming in the pre-market, don't just close your eyes on it. Keep an eye on it. At 9:34, let me take a look at that quickly. No, this right here, I wouldn't have taken it because combining the pre-market price action unknown with the price action on market open. Let me actually open IBM here and I'll show you that. That would be actually good. Let me open IBM. I see what you see. So you wanted to take a reverse ABCD pattern with this M shape on the 1 minute chart, right? But you got scared of this hammer. This candle doesn't mean anything to me. What would have made meaning to me is this setup. This drop in the pre-market and this is a parabolic pullback on the 5 minute chart. In this case, I want to see an M shape on the 5 minute chart and I would have taken it somewhere around here to the short side. I would have been stopped out, but I would have re-entered later because we are starting to form a descending triangle for the breakdown. For me, the entry on this thing to the short side would have been here. I want to see an M shape on the 5 minute chart because the pullback was parabolic on the 5 minute chart. Both the 5 and the 1 minute chart depending on the time of the day. If I see an ABCD pattern on the 1 minute chart, I would wait for an M shape on the 1 minute chart. If I see an ABCD pattern on the 5 minute chart, for example here, I want to see an M shape on the 5 minute chart. Anything else, guys? Thank you, Kyle. Alright, guys, so trade safe. I'll be in the chat room. Have a good day, and next trade review session next Tuesday, 12 p.m. Eastern in the classroom.